Hey guys, it's Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that help me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Today I want to talk about interest rates. Real exciting. You guys have probably heard, if you haven't, I don't know how you have it, but interest rates are at historic lows. So they started like 10 years ago, interest rates dropping, and they've just continued to climb down. They haven't turned. They might have turned for a little bit here and there. Oh, it's 2.5%. My mortgage 2.5%. It jumps up to 3 or 3.5, and then it just keeps coming back down. So at the time of this recording, which is in April of 2021, the U.S. is in ultra high debt levels. Now, let me even step back further. Why does this matter? You as a real estate investor, why do you give a shit if the interest rates are high or low? Well, for you long-term buy and hold investors, which is predominantly it's the only thing I really do, and I assume what you guys do, whether you're wholesaling to buy a rental property or whether you're investing for the long term, that's kind of our group, the Emerson community. So why does that matter for you guys? Well, if you get a mortgage, which is the best way, one of the best ways to acquire is BRRRR, right? The BRRRR method. If you guys haven't seen that video, I've got it up here, linked. Very popular video, very lucrative strategy that I use to acquire my rental portfolio. So what helped me do that? Well, I was locking in interest rates then at 3.25%. So a 30-year fixed term, for 30 years, my payments are going to stay the same at 3.25% on an investment property. Unheard of, right? Historically. Those things kept marching down. Now, if you go buy a primary residence, you're going to get probably in the 2s. Right now, at the time of this recording, you're probably still sitting in the 3s. So I allowed myself to lock in my mortgage on my investment, on my rental properties for 30 years, meaning that will never increase. It's not a variable, it's a fixed 30-year note. When you have some certainties like that, it allows you some confidence. We don't know what taxes are going to do. We don't know what insurance is going to do. We don't have any idea on our capital expenditures, while over 20, 30 years, we can have a pretty good idea, but you don't know in the interim. If you know that you have your mortgage locked in, then you can start making some intelligent investments, because that's not going to change. If you know that you've got a variable mortgage and in 2 years it's coming up, you don't know what that's going to be. Interest rates might be back up to 13, 14% like they were in the 70s. Who knows? So why is that important? Why am I mentioning this to you guys? Well, this article, I want to highlight one thing that this guy said. He said, specifically, interest rates aren't likely to rise at all that much in the years ahead. That's because if the rates were lifted to 6% or more, the net interest on the debt in our physical deficit would actually be the number one line expense on our budget. Now he's talking about the US. So again, we're in the trillions of debts. We're in the 20-some trillion worth of debt. So he's saying if government allows interest rates to come up, the biggest expense for the US federal government would be the debt, would be the interest on the debt. So it can't go up. Now, need I mind you, I'm going to link to this article. It's a CNBC article from over 13, 14 months ago. Actually, it was published in January 2020. Right now, this is April 2021. So 15 months ago, the guy said this. And everybody, what I don't like is agents and people coming out to tell you, go, it's historic lows, buy a house, invest in rental property. You should never let the tail wag the dog. Don't ever do that. Now, if you can take advantage of them, you're in the market to acquire, yes, take advantage of rates, but don't rush into a deal because you think interest rates are going to go up. Who cares if interest rates go up 0.25%? I mean, in all honesty, on a 30-year fixed mortgage, the difference between 4% and 4.25% is like $17 a month. I mean, if that is something that really inhibits your cash flow, then you need to stop and reassess the deal. So why did I make this video? What do I want to tell you about this? What is the overall meaning? Don't let people push you into getting into debt. And what I mean, now I love debt, but hear me out on this whole thing here. Don't let agents, don't let any other gurus tell you, go buy right now, quick, go do it. Find a good investment, run the numbers, and let it make sense, and take advantage of the cheap interest. Now, having said that, I want you to be very cognizant on what you're acquiring, because my next piece is going to be go out, and if you guys are thinking about acquiring debt or acquiring a rental property over the next 1 to 2 years, now would be a good time to start looking. Take advantage of it, but you don't have to rush. People trying to make you rush are usually trying to sell you something. It's probably a loan officer that's already put in a bunch of work on your file, and they really don't want to do any more work. They're like, come on, take advantage. We got you locked in. We got a ding on your credit. We've pulled your credit. Now you got to go forward with us. It's like, take some time. Interest rates aren't going anywhere. They're at historic lows, but they've been saying they're at historic lows for 10 years. So relax. No need to let that rush you. However, if you guys are in the accumulation phase, this is a phenomenal time to take advantage of that. The average inflation over the past 30 years, has been 3%. So if you can borrow money at 3%, you're doing phenomenal. The market returns about 9%. The general market index fund returns about 9%. Real estate investments, 10 to 20%, depending upon how risky you are, or more, or higher. Burr method, like we talked about earlier, will get you higher. But don't let this interest rate that it's going to run away and never going to come back. The interest rates are going to be here. Relax. Use them as a tool, another tool in your tool belt to lock in 30-year fixed loans and take advantage of these great interest rates. However, don't let it rush you. Don't worry about it. I'll link to this article. Again, phenomenal way. Borrowing money at 3% is phenomenal, and investing it at 10, 12, 15%. That's how people get rich. That's how you can get rich. If you too borrow money at 3%. Okay, guys, that's it. That's all I have. I hope that was helpful. Again, I'll publish the link below. It's some CNBC article from 2020, early 2020. I think it's still pertinent today. In early 2020, they were telling us interest rates were going to rise. Hurry up, take advantage. Here we are in 2021, same thing. So relax. If you guys enjoyed this, please let me know. If you didn't, let me know. Got any questions, comment below, and I'll get back with you. Thanks, y'all.